Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark tells us what he thinks were the market highlights of the year. Eric Hadik from InsideTrack.com analyzes the role cycles have played in everything from the stock markets to food production and volcanoes. We'll talk to Ross Clark right after this.
Unbelievable harmonies, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band, Saturday, January 9th at the Alex Goulden Hall. Buy online and save at ontourtickets.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Merry Christmas, Ross.
Yeah, the same to you, Jim.
Well, we're going to take a look at the markets over the past year. The one day that stands out in my mind, August 24th, they called it Black Monday, and it was pretty black, wasn't it?
Well, the year in review, when you pull up any kind of a graphic, whether it be in the energy markets, whether it be in the stock markets, the bond markets, yes, that August 24th does jump out. And it really didn't come out of the blue per se. We had gone through a stretch in the first half of the year where volatility was diminishing down to abnormally low levels. And so by the time you get the internals slowly eroding away, eventually it's like the dam. Once you get that small crack, then it expands very quickly, and that's pretty much what happened when we got into August. But this whole thing, it was a process that went through a development phase. And if we look at the year, the dominant moves in there were really over on the commodity side. It was energies, it was base metals, agricultural commodities. You take a look, some very, very strong trends. And we had a pause in the middle of the year in terms of energy. We'd sold off to the $42 level in oil in January, February, turned the corner from there. But into the spring, I guess early summer, we got it up over $60 as far as the oil price was concerned. But in the equity market side, you'd been seeing, really good strength the first couple of months with the strength in the U.S. dollar. And then the dollar peaked in late February into March. We got some good upside exhaustion signals we talked about. And from there through the summer, it really became a sector rotational kind of market with fewer and fewer stocks participating in the run. You had healthcare, you had pharmacare, some of the technology stocks were doing well, but in general, the non-capitalization weighted indices, the ones where it was equal weighted, you'd see that there wasn't the participation. So we were stuck in a really tight sort of 3% trading range. If you look at it, the Dow and the S&P, as we moved through from March through the early part of the summer into July. But, you were seeing, as I say, the internals were getting weaker, and the oil market, when it started to come apart again in July, by the time we got to the first part of August, oil was back down to new lows. We had gone from 60 back down through 42. We were just in the process of getting under $40. And the credit spreads became a real issue. They had already had a lot of pressure because of what the financings that had been done with the energy stocks in the previous couple of years. And they were having difficulty in terms of servicing their debt. And as we moved through July, early August, there was a real contagion happen here on the credit side. And so by the time we got to that third week of August, and it was an option expiration day, the 21st of August, we kicked in just below one of the significant levels, 200 on the SPDR contracts in the S&P. And that became the catalyst for a really hard break into that Monday, the 24th. So in a span of 5 days, the market gave up 10%. We went from having volatility with the VIX being down in sort of the low teens, 12, 13% in the spring, and jumping to 50 on that August 24th, one of the highest levels that we've seen in many, many years. So it's, for me, looking back on it, we had talked about vulnerability maybe going into the fall. It happened quickly. We got it all out of the way in a span of, let's say, 5 or 6 days, and then went through the normal double bottom or basing effect that you would look for in most years. The classic sell in May, go away, and then come back in September, October for the equity markets pretty much came into play this year. So that as of October the 1st, things have been looking better for equities outside of the resource side. So once we had that October 1st low, and that became the tested low, the double bottom, and once that was in place, started to see some decent strength. But once again, this was like the spring and summer, where very limited leadership. Some of your big cap names, the Visas, MasterCards, were doing really well, or the FANGs as we call them. So that would be Facebook, Amazon, Netflix, Google. These big cap names were making new highs and making the capitalization indices look really good, but internally things were not as solid as you'd like to see. So as we move through November to December, credit spreads start to become an issue again. We've got oil down into the low, to the high 30s, mid 30s, and then $34 during the early part of December. So the selling pressure took hold once again, early part of December, and ran us right into what should be the norm for the seasonal low, kicking in the Christmas rally. So the first part of December, we saw the weakness. By the 18th, markets looked as have turned nicely higher. And I think that basically we should be looking for the Santa Claus rally to help give us a decent close on what has been one of the more volatile years out there.
Ross, I hope Santa Claus was generous to you and your family.
And I wish everyone out there the best of the season and a Merry Christmas.
And a jolly Boxing Day. My guest has been Ross Clark, investment advisor at CIBC Wood Gundy, Vancouver. If you have any questions for Ross, you can email him at ross.clark@cibc.ca. Coming up, Eric Hadock next on This Week in Money.
Always consult your investment professional before making any investment decision. See singing impressionist Andre Philippe Gagnon.
And I think to myself,
In Oliver, December 29th. In Kelowna, December 30th. Buy online and save at ontourtickets.com. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Eric Hadock, the founder of Inside Track and Weekly Relay, available on the web at insidetrack.com. That's inside with 3 eyes. And can you explain why the 3 eyes on the inside?
Well, I should clarify that only 2 of them are in the center and one's in the beginning, but it's an acronym of the markets that originally were focused on in the newsletter. It's kind of expanded from there, but it just kind of hits inflation is the first IN, which is pretty much any commodities. The SI is stock indices. The second I was interest rates. D was the dollar and currencies. E was energy and the oil market. So that's why the acronym and the extra I in the center.
And, of course, you're speaking to us from Naperville, Illinois. That's just outside Chicago, isn't it?
Yes, it is.
And I'm going to be asking you about Illinois, where apparently if you win the state lottery, they give you an IOU?
That has been the case lately. I know they were trying to pass something a couple weeks ago, but yeah, there's the big battle between the years and decades of reckless spending and the deep budget deficit that they're in, and now getting a bit more conservative governor who wants to spend what you make, or at least a little closer to that, that's battling with the Democratic Congress.
So anyway, Illinois is in a big financial hole, isn't it?
Yeah, there's just a big impasse, and I know the numbers. I haven't seen them lately, but as recent as less than a year ago, they would often kind of lump California, Illinois, and maybe one or two others as some of the worst debt and pension plan debt and taxes going up year in and year out, and that seems to still be the case.
Anyway, Eric, down to business here for the interview. In the December issue of Inside Track, you write about food cycles. What are food cycles, and why do we need to be aware of them?
Well, food cycles, as what I'm discussing, I actually call it food crisis cycles. It is a recurring phenomenon, and I tend to believe that some of that has to do with climate and Earth-related cycles, but some of it also with geopolitical cycles. But there seems to be a very consistent, recurring, approximately 40-year cycle during which, at the transition of each of those 40-year cycles, we have seen some sort of food crisis in one respect or another, both globally, and more recently a lot of it has been more pronounced in the U.S., going back to the mid-1800s and coming forward. But some of your, of the top 5 global famines over the last 1,000 or 2,000 years, 3 of those are very tightly intertwined with the 40-year cycle, going all the way back to the 1770s, and a pair of famines in India, all the way forward to the 1930s and the Soviet famine, that was a case of where it was more geopolitically triggered as opposed to drought and crop raising conditions. But we have seen this ongoing cycle, and the 2 most recent events that maybe people can relate to a little bit more are the mid-1930s and the Dust Bowl in the U.S., although there were droughts around the world at that time, and as I mentioned, the Soviet famine, which accounted for over 9 million deaths, was at the same time. But the 3 years where the Dust Bowl was really strongest were in 1934, 1936, and 1941. But that whole period was a food crisis. And ironically, that is also responsible for driving a lot of the migrants and farmers and food producers west to California, which ultimately became the food growing mecca of the United States and in many cases of the world. And lo and behold, 40 years later, California has its worst drought on record, at least up until recent years, 1976-77. And that impacted food production and prices of food, although at the same time you had the compounding effect of the dollar suddenly plummeting after the breakdown of Bretton Woods and the Nixon gold shock of the early 1970s. You had a lot of factors, which is often the case. It's that synergy, that compounding effect that has impacted food prices, crop prices, on this 40-year cycle. And the mid-2010s, I really have it kind of narrowed down to 2016 to 2017, having the greatest synergy of cycles, is when these food crisis cycles come back into play.
Now, in Canada, too, one of the reasons why our food prices are going up is the low Canadian dollar, and we buy most of our winter produce from California, so we're paying 72 cents on the dollar. It's a little pricey for us as well.
Yeah, and I think I've mentioned to you before that my cycle work in the Canadian dollar specifically is looking at, I've been talking about an ongoing downtrend into early 2016, and really the what I would call the ideal, and when I use that word, I just mean the greatest synergy of cycles coming together. March 2016 is when I expect to see the Canadian dollar bottom. But as you say, up until now, that's had an intensifying effect on the price of food for importing it into Canada.
Now, of course, Eric, if you're looking for a cheap holiday, I suggest anywhere in Canada, especially Vancouver, because your American dollar is really going to go a long way.
Yeah, that seems to be the case, not just in Canada, but many places around the world the last couple of years, especially since May of 2014, when the dollar really entered the most bullish phase of its cycles and escalated. Also, the euro was plummeting during that time.
So lots of vacation places for Americans to enjoy.
Yes.
And I think maybe that's one of the reasons why Hawaii's down. I know Canadian business to Hawaii is down, but for Americans, why visit an American place when it's cheaper to go to someplace else?
Now, that could certainly be the case. It's the opportunity for those that want to travel abroad. Take advantage of it now.
You discuss cycles colliding in climate, sunspots, volcanoes, and commodities. Please tell us about the different cycles, how they collide, and what the potential fallout could be.
Well, I have that's a pretty broad topic, but I have gone on and described many of the diverse cycles that do come together in this time frame. One of those, as you mentioned, is volcanoes, earth disturbances in particular, but even more specifically volcanoes, where you've seen a very consistent, what I look at is swarms of volcanoes, not just one or two, and timing cycles from that, but when there seems to be an increase of volcanic activity. And a perfect example goes back 200 years ago when you saw Mount Tambora in Indonesia erupt in 1815 and caused the year without a summer in 1816 and really a food crisis from 1816 through about 1820. But as many geologists and scientists will tell you, there was a whole series of eruptions beginning in about 1812, including some preliminary ones at Tambora, but also ones in the Caribbean and around the globe. And it was this whole swarm of volcanic eruptions that was already starting to lower global temperatures. Then Tambora was the real tipping point, and that is one of many triggers and causes of food crises that you've seen for hundreds of years on this 40-year cycle, because that's 5 phases of the 40-year cycle ago. And there have been many additional occurrences of that, both 40-year cycle, but I also look with things like volcanoes and climate and sunspots. I'm looking at known cycles within those events, 100-year cycles, 200-year cycles, and the intriguing thing to me is that each one of them have a particular phase that will be culminating in the next few years. In fact, when you deal with solar storms and volcanoes and similar eruptive things like that, 2019 and 2020 is a lot of cycles dating back to things like the Carrington event of 1859, which anyone that's studied solar cycles knows that that's kind of the granddaddy of all solar storms. 160 years forward from that 40-year cycle again is 2019. One of the other cycles that I look at in Earth-related events is a 17-year cycle. I really discussed and documented that back in the early 2000s and then again in 2007 with regard to the markets, but the 17-year cycle also impacts Earth disturbances very closely. And if you look at the three most powerful and devastating volcanic eruptions of the last 200 years, they are separated by exact phases of that 17-year cycle, but it's actually 68 years, or 4 phases of the 17-year cycle, going from Tambora in 1815 to Krakatoa in 1883, and then a little bit lesser known one, Lamington, in 1951, but each one of them is looked at as 3 of the most powerful volcanic eruptions of the last 200 years on a perfect 68-year, 17-year cycle periodicity, and the next phase of that cycle is 2019. So you've got all these different cycles coming together, and I think that in most cases you see a build-up into that time frame. So it's not just 2019, but it's the years preceding that where you see an increase in solar storms, in volcanic eruptions, in earthquakes, and also in climate-related challenges, shall we say.
Well, we've just had the Paris Climate Change Accord and meetings, and I've always wondered, how can men control volcanoes, the Earth's orbit, sunspots, and those are the major factors in climate change and weather. Are we deluding ourselves thinking that we can actually control things?
I think to a large extent, yes, it is a little delusional, perhaps also arrogant, but it's one of those things where I guess I take a little more center-of-the-road effect, and I certainly agree with the contention that a lot of Earth's resources are being abused, are being massively polluted. You look at the videos and pictures and data on the climate, or not the climate, but the atmosphere through key areas in China where they have to go around wearing masks just to be able to breathe. That tells you there's some serious problems there, and that has its ramifications. Now, how much of a causal effect that is on warming, I think it could contribute, but I'm not convinced that it's the all-encompassing factor that they want to make it sound like. And so many things appear to be more just done for the spin of it or for the media. We hear that they had this historic global agreement that, if I have it right, the thing was that everyone agrees that they won't do things that would raise the temperature more than 3 degrees in the next 100 years. And then you go back and you look, and I think the specific data is from, in the 1880s, the mean global temperature was 13.73 degrees Celsius. In the 2000s, the peak of warming up to now, 120 years later, the mean global temperature was 14.51 degrees Celsius. So that's a whopping astronomical rise of about 3/4 of a degree Celsius. And they've made this global, historic, unprecedented agreement that no one will cause more than 3 degrees of temperature rise over the next 100 years. Well, what's the point? If 0.75 degrees is already ringing the warning bells and telling us that everything's going to hell in a handbasket because of man-made issues, what's the point of coming to an agreement that we're not going to raise temperatures more than 3 degrees over the next 100 years?
Right. I mean, I look at BC has a carbon tax on gasoline. Has that stopped people from driving their cars? Not one bit. And they said, but doesn't that cause more air pollution? I said, but cars pollute the least they ever have in history. Smog in Vancouver is virtually non-existent now. Shouldn't they really call this Paris? Shouldn't they really call it Paris?
Western countries and in the more advanced countries, we have taken a lot of the steps to mitigate some of that. Now, there still is plenty of culpability we share for polluting and for consuming the things that trigger a lot of the pollution in third world countries. But again, where I struggle with the whole debate is when you try and make it a causal connection and your whole argument hinges on that man-made global warming is the cause of climate change, that's where I struggle. I think that the Earth has warmed in the last 150 years, and what no one really discusses in the global warming camp is that prior to that rise of 1 degree Celsius, we were in the Little Ice Age. So would they prefer that we're back in the Little Ice Age, which lasted for 500 to 550 years, from the early 1300s to the 1850s is usually where it's pinned down to. Is that better? You know, things like the Black Plague and famine across Europe and China and other places because of the temperatures, or is it better that we've warmed a degree from there? The globe has expanded the areas where crops can be raised, and as a result, and other factors too, but you've seen the human population explode. There are many other reasons for that too, but a conducive climate has also been one of them. So it's kind of a spurious argument, in my opinion, when you just want to talk about the evils of temperature rising 1 degree Celsius over the last 150 years. You know, there's more to the debate, I believe, than just what's being thrown out there for the sound bites and for the alarmism. And I think that a more intelligent, in-depth discussion is what I would like to see. And even when you're talking about cars and pollution, when you look at the data and see that, you know, things like the massive livestock raising industry and how that is done with the CAFOs, I saw one statistic to where if everyone, I think it was just in America, were to skip meat and dairy 1 day a week, it would be like removing 7.6 million cars off the road as far as the methane and carbon dioxide emissions. And so there's a lot of things that just aren't factored into the whole equation, which again, I keep repeating the same thing, but that's where I struggle with this argument.
Would it have been more honest to call the Paris Accord an attempt to control pollution rather than climate change?
That is where what I would really prefer to see, because that's a little harder to argue. You know, a lot of my philosophies and my bent would lean towards the conservative side, but one way to get the more extreme conservative side kind of pinned down to entering this discussion would be just to talk about the pollution worldwide. You know, when they went from you know, anthropomorphic global warming, man-made global warming, then they just called it global warming. Then all of a sudden one day you woke up and it was now called climate change. That's so disingenuous to use a term, a general, generic term like climate change, and to then say, are you against climate change? Do you not believe climate change exists? Well, yes, I believe it exists. I believe the climate changes every 24 hours, every 90 days. We call it seasons. Every 365 days. The climate's constantly changing. If there's one thing that's constant in climate, it's change. So to call this climate change was just a way to kind of create this huge umbrella with a term that really has no meaning because it has such a general meaning. And I would I agree with you that I would much prefer to see it discussing pollution specifically.
And that means instead of slapping a tax on gasoline, how about supporting public transit? Wouldn't that help pollution?
Yeah, and although I understand and agree with a lot of the anti-regulation, anti-taxing mentality, I also see the common sense that you do have to tax and regulate and penalize things that are detrimental to the overall community and society, and to supplement or encourage the things that are good for the community. And that's not a whole Marxist socialist type of thinking. That is just common, the golden rule type of thinking spread to the whole society, that others are thought of on the same par and level as yourself.
Well, I mean, that's why we have high taxes on cigarettes and alcohol, right?
Exactly.
We're speaking to Eric Hadock, founder of Inside Track and Weekly Relay. Eric, getting back to the food cycles and so on, is there a way for investors to take advantage of these ups and downs?
I think there definitely is. Now, one thing that I might reduce a lot of your listeners to a small niche or niche, I look more at the futures markets, which obviously is the high end of the risk spectrum. And so I look at things like the soybean market and corn and wheat and a lot of your other food commodities. But there are also related ETFs that people can, the more average investor and a little more risk-averse investor can utilize. And there are certainly stocks of companies that would benefit from that, but you have to be very careful. If it's a food processor, they could really lose money from higher raw food prices. So there's a wide spectrum of ways to capitalize on that. But as I said, I really focus on the agricultural commodities, and that is one of those things that has helped hone my outlook, that the work that I do was telling me that the very end of 2015, November and December in particular, were when a lot of cycles in soybeans, corn, and wheat were bottoming, and I have gotten some very early preliminary buy signals in a couple of those markets, and I'll be looking for confirming signals along the way that tell me we've turned the corner, and often that is an early warning sign of some food challenges that are already in the pipeline. It may be some struggles they're having in South America at this time. I know there are certain areas that El Nino has created flooding, while other areas it's just intensified drought that has been there. I believe it's in Chile, that the northern part and the southern part are two opposite ends of the extreme where precipitation is concerned. And as they get through their growing season and closer to reaping and harvesting, that you'll start to see if there's been any adverse effect of climate and these cycles on some of their food production. But I never get too tunnel visioned on one scenario like that, because just when you do, something comes out of left field that you would have never expected. I've started to discuss just the whole idea of soil erosion, and that has been intensifying often in areas that you don't think about it like in the past, but you look at even California and all of the drought they've had, and then when they do get a heavy rain, often because of fires that have come during the drought, the rains just wash away critical topsoil, and that cycle continues to increase and amplify, and at some point it's going to reach a tipping point where even just soil becomes an issue, and that's very similar to the Dust Bowl of the 1930s. And interesting is when you read analysis of even before the Dust Bowl, there was already agricultural kind of experts of the day discussing that cattle grazing was already compromising soil in the 1850s when they had a drought. The Civil War drought began in 1856 and continued through 1865. And you'll notice that 1856 is also an exact 160 years prior to 2016, so it's that same 40-year cycle. And then in the 1890s, there was another drought that hit the Midwest. And when they were doing analysis after that, and even triggering Congress legislation in the early 1900s, the thing they were addressing was the compromising and the erosion of topsoil. Lo and behold, an exact 40 years later, you had the Dust Bowl where winds and storms were just picking up the remaining topsoil and creating dust storms like we've never seen here before or since. And now you've got similar soil erosion going on not just in the U.S. but around the world. It was funny that right after I published the December Inside Track, which really was the fourth monthly issue in a series where I've been updating these food crisis cycles, one of my readers forwarded me an article that had just come out on 2 days later, and it was analyzing the soil erosion that has occurred around the world, and I believe the numbers were around 30% of topsoil that had disappeared just in however many decades. I actually intended to pull up this article again and read the data before we got into this interview, but I neglected to, so I don't have the exact details, but it was just uncanny to me that while discussing this, while cycles seem to be reaching fruition, here there's corroborating analysis showing that we're getting very close to a tipping point, a very vulnerable point where agricultural can't withstand too much more challenges before there's going to be some real adverse impact.
Well, when you talked about soil disappearing, I just saw a documentary about sand disappearing because you need jagged sand, the kind of stuff you find on a seaside, for concrete, because stuff from dunes, say in Saudi Arabia, doesn't work out because it's round and smooth and it doesn't lock together. So people are buying these luxury condos in holiday resorts, not realizing that the sandy beaches they admired are disappearing because they're being used to build those condos. Same kind of thing, right?
Yeah, that's a real catch-22 there. But yeah, I think that just all the different uses and abuses of our soil and of our resources, they can't go on indefinitely or in an unending fashion before sooner or later it's going to come home to roost.
Well, some of the most fertile land in the world is here in the greater Vancouver area. They do have an agricultural land reserve that's supposed to preserve this nice soil, but they always seem to find a new excuse every year to build another condo development or a shopping mall on it.
Yeah, and that's where, you and I we've gone from sounding a little conservative on the climate change, global warming argument to sounding more liberal on the rampant capitalism type of approach. And there does have to be a responsible way of utilizing resources and not overusing and abusing them. as we've seen more and more. And I agree with you there. And if I can interject here, I was just on my one computer in front of me, I did pull up the article, and it was in the Guardian on December 2nd, and the headline is, Earth has lost a third of arable land in just the past 40 years, which, certainly jumped out at me too, because they're just reinforcing the 40-year cycle. And it just goes into detailing the soil erosion in the UK, in the US, and around the world. And again, sooner or later, it's, no one notices it when it's in the developing stages and when you haven't quite hit that tipping point. And then all of a sudden, you just have a minimal increase, and it's like the proverbial straw that breaks the camel's back, and everyone's shouting, why didn't we do something about this before now? Why didn't anyone notice? Well, there was some notice of it. It's just no one was alarmed enough to take some responsible actions to try and prevent or lessen or mitigate it.
Is new technology going to be able to cope with these cycles and keep our food supplies up?
I think that to some extent, yes, but even that hits a point of diminishing return. And, I've done a lot of research on food, not just from this cycles and food crisis perspective, but also from the perspective of real, honest-to-goodness, healthy food. And a lot of things that technology does to increase yields, increase the efficiency and whatnot, also have a delayed detrimental effect on general health and a lot of unintended consequences. And you look back, the 70s were really when in the U.S. we had basically the farmers were encouraged to plant fence row to fence row, corn as dense as possible. And then in the 40 years since then, there's just been new technology, like how to inject pesticides right into the corn itself, which, I'll let you figure out the common sense of that one. But it has increased yields, it has increased food, and corn has gotten so cheap that corn syrup and corn derivatives are used in everything. And lo and behold, we have a overweight, obesity, diabetic epidemic on our hands that's very closely linked to the increase in available cheap sweeteners and simple carbs that just turn into sugar in your body. And so you get the cheaper food, you get the gluttonous approach to it, and then you have the healthcare issue that we have on our hands. So even when technology on the surface looks like it's increasing your yields or mitigating food crisis cycles, there's often a dark or seedy underside to that, those advances. And so there certainly is a balance and a middle ground there somewhere as well.
Would you see more of a push to grow your own veggies? I know Vancouver City Hall, for example, has a vegetable garden. There's several community gardens in Vancouver. Should there be more of an international push for that?
I think definitely. I'm certainly of that mindset, but there's also a realistic aspect to that too. And, there are only so many areas, and, if everyone at once suddenly gave up on processed foods and started demanding fresh organic produce, you'd have a shortage of that like you could never imagine. But I do think that diversifying, and that's another problem that I see with agriculture in general, and I'm really just echoing what a lot of far more intelligent and far more versed and educated people have documented and explained. But the whole problem, once you had that fence row to fence row corn planting encouragement of the 70s, it has produced a monoculture throughout the entire Midwest of either corn or soybeans or wheat, and all the other crops that these farmers used to grow are not only were they kind of pushed out, but once the subsidies started being paid to them from the government for growing the corn, and the way the farm bill in the U.S. is structured, they're penalized if they grow other crops. So you've removed the ability to be more diverse and to withstand more problems, in the last few years, and even sources like CNBC and others came out and did exposés or documentaries on this. So it's not just a extreme internet only type of media that's covering this, but some of these GMOs and pesticides that have been used to increase yield in the Midwest, they're now finding in more and more locations super pests and super bugs that have mutated against these pesticides. And if those super bugs begin to really propagate and populate, it's going to create a problem bigger than we can ever imagine, and we don't have the diversity of crops like we did 50, 100 years ago to partially mitigate a problem like that, to where, maybe one crop is impacted, so you shift your eating habits for a while to another crop. Well, when all the eggs are in one or two baskets, if that basket starts to break down, you're in much more serious problems.
Eric, how can people find out more about Inside Track and Weekly Relay?
Well, we have three websites that kind of spread apart a lot of the information and articles and interviews and whatnot. The two that have a lot of free publications and articles and excerpts are 40yearcycle.com, and that's the number 40yearcycle.com, and 17yearcycle.com. And then also our flagship website of Inside Track, and that's INSIIDETRACK.com. And that's where you're going to find any administrative and subscription information, and also samples of technical indicators we use and other aspects to it like that. So they're the three websites where people can both read, sample a lot of what we have put together, and also contact us.
Eric, thanks a lot for chatting with us.
Thank you, Jim, for having me again.
My guest has been Eric Hadock, founder of Inside Track and Weekly Relay. That wraps up our show for this week. Thanks to our guests, Ross Clark and Eric Hadock, and thank you for listening. Comments or questions for the show can be emailed to info@howstreet.com. I'm Jim Goddard. Best of the season. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.